Hello, good morning, good afternoon, good evening, everybody. This is Henry Liu. Depending on where you are in the world, of course, it will be different time zones. And I'd just like to take this moment and welcome everybody for joining this special webinar. And since time is very limited, so we're going to get started right away. This is a special webinar regarding my Mastermind Mentoring System. And I get asked a lot about my Mastermind Mentoring System, and most of the time, I think there's a misconception going on out there because my trading revolves around news trading. So a lot of traders think that all I do with the Mastermind Mentoring is about news trading. Well, news trading is only about maybe 20% of the Mastermind Mentoring. And what I'm going to do today is I'm going to basically share a little bit with you guys what the Mastermind Mentoring is all about. And also at the same time, I'm going to share with you my news trading strategies. And there's actually 3 different ways to trade news, and we have a lot to cover today, so let me see if I can get to them as soon as possible. So without further ado, let's get started. And once again, I'm seeing we're getting over close to 500 people already in this webinar. And for those of you who are just coming in right now, we are just about to get started, and let me just say welcome for taking the time and joining this special webinar today. And we have a lot to cover, so I'm going to go ahead and get started. Everyone should be able to see your screen. You should see a PowerPoint which says Henry Liu's Mastermind Mentoring System, and you should all be able to hear me. Now, if you guys have any questions, please hold on to the questions, and you can always ask me later on when we are about to close. At the end of this presentation, I'm going to take about 15 minutes to answer the questions. So you guys should also see a chat window. That should be depending on your setup, and should be able to type in your questions there and go from there. All right. So if you just give me a few minutes, I'm going to go ahead and start. All right, Henry Liu's Mastermind Mentoring System. Let's get started. Now, so is my mentoring program all about news trading? Well, I've answered that already. It is really not just about news trading, even though fundamental analysis is a very huge part of trading. In my opinion, market moves because of news releases. If you really look at the fundamental part of the market, if you look at the currency market, you have to understand that currency market moves not because of when some indicator lines up and it's pointing to a upward movement or downward movement because of the indicators. Right? Market really doesn't move because when indicator or any kind of technical analysis is set up for it to move. Market moves because there are people buying certain currencies and selling certain currencies. It's all about order flowing into the market. So why would someone buy a particular currency and sell another currency against it? Usually it's because the fundamental outlook or because of risk sentiment that goes on in the market. And that's why someone will say if the outlook, let's say in Australia is looking much better, traders would like to buy the Australian dollar. And if the outlook, let's say, for the U.S. is not looking as good, so traders will use the U.S. dollar to exchange for Australian dollar. It is just common sense, the way that the market works and the way that the entire currency market operates. Now, a lot of times traders ignore the news, or they look at the news as something that to avoid. In my opinion, the way that I trade is that I actually embrace the news. So not only we look at what happens during the news and immediately after news, but also we look into the longer term effect of the news. And let's not forget, I also look at what happens pre-news. So basically the system covers the news, not from your typical news trading where there's a system being developed or has been developed. Basically, the news trading concerning to the immediate market reaction after the news. That's very good, but a lot of brokers have figured out a way to basically widen the spread or give you a huge slippage, or basically just give you recall so you could never get in after that immediate release time. So news trading has been giving, if you look at news traders, there's a lot of misconception about news trading. A lot of traders now saying that you can't really make money doing news trading. But for me, I classify that as spike trading. Right? News spike trading. What I do is news trading. Now, if you guys look at any kind of financial programs or financial TVs, you'll see, let's say Bloomberg, CNBC, all of these financial programs out there. We have analysts, economists coming out and analyzing the market, explaining the news and talking about news. It's 24/7. So if news really doesn't really affect the market, why would big corporations, big media companies like that spend so much time talking about it? So there's really a huge, in my opinion, a huge divergence in forex traders who, because I know there's a big amount of majority of forex traders only concentrate on the technical side of trading, whereas there's a whole new world out there that only concentrate, well, not only, but concentrate both the fundamental and the technical part of trading. So hopefully today I will be able to share with you what my system is all about, and at the same time I'll cover some of the news trading methods that I do, and hopefully you'll be able to pick out something, and and you can learn something today. So without further ado, let's keep on going. Now, my Mastermind Mentoring program is basically a combination of technical, fundamental, swing, market cycle, and news trading. All right. So let me just go through this really quick so you can understand. It's more like an overview of what my system is all about. I use technical in my trading because technical trading is more or less like a self-fulfilling prophecy. When a lot of people are using it, it really works. While more people are looking at the same chart, the same levels, it tends to work much better. And of course, as we are all humans, and our mind tends to gravitate to certain levels, like when we look at a whole number, let's say for the pound yen, all right? So if you look at the pound yen, we're very close to 130, okay? So 130 is a psychological level. So when we look at those levels, we see them, and that's where we'll probably, either put our stop loss there or we'll put our take profit there. So just the way that we all work. So support and resistance, and based on technical levels, they do work, but you just need to pay attention to the correct one. So in my trading system, I do a lot of support and resistance analysis, and it is probably as technical as I will ever get to. Is just on the support and resistance. I don't do any pivot lines or MACDs or anything like that, because I believe that the market works on a rhythm, and sometimes the overbought, oversold doesn't really work, and what really works are the support and resistance levels. If I try to explain to you guys what I see in the support and resistance level, it probably will make this into a 2-hour presentation. So I'm trying to wrap everything up in just under an hour, so I don't really want to take too much of your time. But so that's the part of technical trading that I do. As far as fundamental trading, I look at the long term, the medium term, and the short term effect of news based on fundamental trading. And swing trading, we look for historical supports on the daily chart, and that's where, and combine that with support and resistance. That's where I also take trades. And market cycle, number 4 market cycle is basically a way for you to enter the market based on a particular time frame. Okay, there are 24 hours a day in trading, right? And basically, there are times that you should be trading, and there are times you should stay out of the market, because there's really very low liquidity, very low volume, and it doesn't really, it's not an optimal environment for you to be trading during those times. And I don't know if you notice this, but if you can backtest on your chart, and you'll see that most market really becomes active, and when you see a lot of movement, usually happens in a certain time, let's say, during the New York Open, when at 9:30 in the morning when New York equity market opens, then, boom, you have 100, if the daily range is about 150 pips in that particular time frame, 3 hours or 2 hours after the open, you see 80 pips of movement. So those are the premier time for you to be trading. And by being able to take advantage of these market cycles, you can really refine your entry and take advantage of market psychology. And let me give you another example so that you can get an idea how market cycle works. I mean, remember there's a saying that when you try to pick a top or try to pick a bottom, it's very tough. It's like catching fallen knives, because knife is falling, you try to catch it, you're going to cut your hand. If you apply your trade with market cycle, what happens is that you don't know where the market is going to turn. When the market is trending up or the market is trending down, you don't know where it's going to turn, right? Like today's euro, we saw when we were looking at the euro today in the morning, it was at 128.40, 30, 40 area, and we were looking for a sell on the euro, combination of factors today, and we were waiting for the euro to reach the top and then we'll sell it. So we waited, and we used the market cycle to time our entry. And if you look at the historical charts on the euro, you will see that the euro is likely to bounce back around the 128.50 area or so. But we waited and we used the market cycle, and market reached 128.80, and that's where we should have gotten in using the market cycle. So how we just look at the chart based on the support and resistance levels, we'll probably have gotten around the 50 or the 60. But if you use the market cycle, you actually could get in 20 pips better than a normal entry. So there's a lot of uses for the market cycle, and that's one of the fundamental trading method that I do in my daily trading. And of course, the Mastermind Mentoring, I also talk a lot about news trading. And we trade high-impact economic news releases that are tradable. And basically, this is going back 3 years. Basically, I look at all the high-impact news releases, and we look at the track record for 3 years, and we pick the ones that provide, number one, at least 50 pips of movement, and number two, provides at least 70% of consistency. So when the news comes out, if the deviation, if you don't know what a deviation is, basically when a news is scheduled to come out, there's always a forecast number for that news. And when the forecast come out at a certain number, and when the actual number, the actual release comes out, differs from the forecast, the difference is what we call the deviation. So when we look at the news, we make sure that the news, when it reaches a certain deviation, it will move at least 50 pips, 70% of the time, when you add all of the releases for the past 3 years. So that's how we determine, which news to trade and which news are just a waste of time. So that's part of the trading that I do in the Mastermind Mentoring. So basically, if you look at this, news trading is only about 20% of what I do, because every day in our Mastermind Mentoring program, we look at the technical side of the market, see if there's an opportunity to get in. We look at the fundamental side of the market to see if there's any kind of long-term opportunity to get in. At the same time, we'll look at this to see if there's any swing trading, which is very similar to fundamental trading, but it's more of a technical part because we're looking at a longer time frame. And of course, with market cycle, we have at least 3 opportunities a day to jump in on a trade. And on top of that, we look at news trading, which we know that there are about 30 news releases scheduled for the month. So that's where we trade those news when they are scheduled during their scheduled time. So that's pretty much what I do. And every time we look at the market, we look for multiple confirmations, and technical is considered as one confirmation, fundamental is another. So we look at a lot of these things and a lot of proprietary ideas on how to jump in the market. Now, while we're on the subject of news trading, which is the last part I do, let's jump into the 3 different methods that I trade and use. Now, this is only available to my Mastermind Mentoring Program students, and also, if you bought my ebook, you probably read about the 3 trading systems. I've never shared this thing openly with anybody, but today I'm going to share with you guys, so let's go ahead. Now, there are basically 3 ways to trade and use. Now, some of them might seem simple, but for those of you who never traded and use, this is basically an overview of what I do. And if you've been trading and use, I'm sure that I'll be able to share with you something new with my system. So the first one is to trade a spike, right? So spike trading is basically we wait for the news release to come out, and based on the release number, we will enter the market immediately, either with a long or short position. So of course, when a news release comes out, you need to have some kind of a news wire service or some kind of a audio or a text service, so you know exactly what the release is. And immediately you'll try to jump into the market. Let's say that for interest rate decision, last week we had the Bank of Canada interest rate decision, right? We were expecting Bank of Canada to hike rates, but the expectation was only about 65% of possibility for Bank of Canada to hike rates. So what happened after a rate hike, Bank of Canada decided to hike interest rate. Market really started to go to buy the Canadian dollar, because it's when interest rate goes up, the value of the currency goes up. So that was a perfect spike trading. We jumped in on this trade last week, and the market moved 120 pips, 130 pips at the end of the day. Well, actually, within 2 hours, you move 120 pips. So if you get slipped, if you trade in news, you know what a slippage is. In a fast-moving market, if you click on a buy or sell on your trade station, sometimes you don't get the price that you clicked on. Let's say you clicked on 100, instead of 100, you get 80. So you got slipped by 20 points. All right, so when you do a spike trading, you don't really care about slippage. You don't really care about how big the spread is. Okay, all you care is about getting into the market immediately. Now, of course, you can trade spike trading on every trade. There are news releases that you could trade spike trading, such as the interest rate decision. Okay, such as high impact releases, maybe the GDPs or even maybe the CPIs. But aside from those high impact releases, you don't trade the spike. So you might ask me, Henry, how do I know when do I trade the spike trading? Well, the easy answer would be to basically sign up for my newsletter. And once you sign up, I will send you emails, and I'll let you know which news to trade and which news not to trade. So most of the people that are here in this here today in this webinar, I'm assuming that you are all on my email list. So that's where my newsletter will come in and will help you out. I'll let you know which news you can trade spike trading and which news you shouldn't trade spike trading. We don't get spike trading news a lot, but when we do get them and the market and we do get the surprise, it is very basis, a consistent gradual basis. So what we're doing with the spike trading is that we'll jump in immediately after the release. So depending on the release, if it's better, we'll buy. If it's worse, we'll sell. And we'll try to catch the initial spike, or at least part of that initial movement. And we'll put the stop loss usually around 15 pips from the pre-release price, right? Because remember, when the market moves, you're looking at the pre-release price, right? The just 1 second before the news was released, that's considered as the pre-release price. So what you'll do is you'll put 15 pips from that area. In a perfect environment, in a perfect world, you got in exactly at the pre-release price. All right, so you're looking at about 15 pips of stop loss. But of course, if you get slipped, if it is, if the market moves and you got hit by a widened spread, then you need to adjust that. But still, we will be looking at the pre-release price. As within any news trading, the pre-release price is like the one golden rule that you don't violate. Okay, and let me just take this moment and explain this real quick with everybody. When you do news trading, the pre-release price marks, it's like a line in the sand, right? It separates the currency from after release to pre-release. Okay, So when a news comes out, right, the effect of the news is marked as after release. Okay. Now, if the currency comes back to the pre-release price just 1 second before the release, basically means that all the effect of the news is now being reversed. It's now gone. So in essence, it means that whatever took place before with the news, right, now the effect is over. So when we look at news trading, we always have to pay attention what is the pre-release price. Now, once we know what's the pre-release price, that will be the line that we draw. If the market comes back to that line, we're out of the market. Because if the effect is already gone, there's no point to be in the market in the first place. Okay, so we always look at the pre-release price, and when we trade the spike or we trade retrace, you know, any of the three methods that we do, we always look at the pre-release. And of course, we put the stop loss 15 pips from the pre-release, and this is the type of trading that you need to react really fast, and you really need to have a good broker that will allow you to fill in. Now, you might ask me, Henry, where do I put my take profit? Usually, any kind of high impact news that we trade, I will look for at least 50 pips of take profit from the pre-release. So if the pre-release is, let's say it's the euro at 128.00, if that's the pre-release price, we'll be looking for 128.50 for our take profit. Now, if you got slipped, let's say you got in actually at 128.20, so you will go for 30 pips instead of the 50 pips, because you know the market, any kind of news that we do, spike trading or anything, we're always shooting for 50 pips of movement from the pre-release price. Now, of course, some news market will tend to move a little bit farther, you know, depending on the surprise. So you really have to make an executive decision when you are trading the news and decide if you want to stay with it, or you know, you want to take some profit off and leave another a small portion running and see how far it will take you. But that, you know, will go into trade management and how you manage the trade. As far as news trading, you know, we trade a spike, we jump in immediately after the release, regardless of your spread, of your slippage. Of course, you know, if you deal with a crook broker that'll slip you 100 pips, then you can't trade spike. So really need to get a decent broker. Now, what are decent brokers? I've had experiences with different brokers, and unless it is really a small, you know, company, most brokers will allow you to enter the market after a requote or two, or you know, or a little bit of slippage. But most brokers will allow you to get into the market. You don't see those 200 pips slippage anymore, because I think they're now being heavily regulated. So any reputable broker should be okay. Now, yeah, you get slipped 20 pips, you get slipped 30 pips, you might feel bad about it. But then the only time we trade spike trading is when we know that those 20 or 30 pips are not going to affect the big picture of the trade. That's why we don't trade spike trading on every trade. The ones that we pick is because we know that the market will move gradually and consistently immediately after the release. So we don't care, you know, paying. You gotta pay your dues, but we'll still end up making money. So this is like the dollar cat trade that we took last week, and you'll see the market. We ended up making about 30 pips from that trade live in the trade room. But what happens? The market keep on dropping. There's another 80 pips of possibility. You know, so it doesn't really matter if you got in 20 pips, 30 pips after you know, after your entry, or you got slipped, or you got, you know, 20 pips of spread that you have to pay. It doesn't really matter. All right, so let's move forward. All right, the second way of trading the news is called the trader retracement. This is probably the most common trading method that I do. Mostly, I think 80%, 85% of trades that I do is based on trader retracement. So what we do in retracement trading is that we wait for the news release to come out, and basically based on the release number, we'll determine where we will get into the market. Usually we wait for the market to come back. If we do get our deviation, there's actually three W's. I didn't write it here, but let me just share with you guys with retracement trading. The first W is that we wait for the release number. Now, with every news, I explained we have the forecast number, we have the deviation, all right, and basically we have the revision. But usually revision doesn't come into play except for certain news releases. But most of the time, we look at the forecast number and the actual release to get our deviation. So on every news release, if you read my newsletter, I will tell you what's the deviation that we're looking for a particular news event. So the first W, there's 3 W's to retracement trade. The first W is we wait for the release, making sure that it hits our deviation. The second W, we wait for the market to spike. Remember, this is a retracement trade, so we have to wait for the market to move first and then come back, right? 'Cause without the initial move, there's no retracement. So we wait for the market to move. Now, what I'm looking for the market to move is that I'm looking for the market to move in the direction of the deviation, right? If we hit our deviation on the better side, I want to see the market go up. If we hit our deviation on the worst side, on the negative side, I want to see the market go down. So this part is very important. Sometimes, traders just jumping. Sometimes with spike trading, you look at the number and then you base the number, you jumping with your eyes closed. A lot of those auto clickers, when you set it up, it will click for you. You don't even have time to react. What happens is that you are really compromising the ability to see how the market reacts to the news first, right? I mean, granted, you might be able to jump in at a good price, but at the same time, you're gambling on market reaction. So the second W for the retracement trading is to wait for the market to spike up first, all right? And it's important because when I'm looking at the spike that goes on in the market, I'm looking at the very minimum a spike of 30 to 50 pips. Now, of course, the more it spikes up, if the market spikes up 100 pips, I'm really happy because the more it goes, the more it is likely to continue going, but not before it makes a decent retracement. Okay, some traders, if you only do spike trading, you see the market, escape 100 pips, and you feel, oh, you missed the trade. But retracement trading is totally different. What we want to see is we want to see momentum. You want to see the market spike up. And once the market spikes up to a totally new level, what we do is we wait for the market to come back. You can use your technical, let's say a Fibonacci retracement, and you can see where will be the likely area for the market to retrace. And then you plan your entry once the market retraces. So the 3 W's is simple. Is we wait for the market, we wait for the news to reach our deviation, we wait for the markets to spike, and we wait for a decent retracement. So that's basically how you would do the retracement trade. So without any one of these 3, you don't jump into a trade. So let's say if we get a news, it didn't hit our deviation, boom, we skip the trade. We get a news, it hit our deviation, but the market only moves 10 pips on the initial spike, or 20 pips on the initial spike. Then you say, it doesn't look good. Even though it did hit our deviation, but it only moved about 20, 25 pips. There's no spike, there's no momentum. I'm staying out of the trade. Or, it moves, but the market never came back. And if the market doesn't come back, you don't jump in, because what's going to happen if the market doesn't come back? Once it starts to come back, it's going to keep on going and knock you out. So most of the time, if we don't get all 3, we stay out of the market. So that's the little tip on trade the retracement. So going through the rules, this is, of course, the perfect environment, perfect trading environment, is that we wait for the market to give us the news that hit our deviation, and then we wait for the market to come back 10 to 15 pips on pre-release. Sometimes, it's not possible because if the news is that good, usually we don't get that kind of retracement. So what we do is we might have to settle on the second point within 10 to 15 pips. Sometimes we might have to settle for 20 to 25 pips. All right. but it depends on the news, depending on how market reacts. Trading is not an exact science sometimes. Like contrary to popular belief, some traders look at this from a purely scientific point of view, or from a purely technical point of view. Oh, this is going to move like this is going to move like that. The market is going to come down exactly on the euro at 128.72, 01. That's where I think the market is going to go, and that's where I'm going to get in. Currency market doesn't work like that. Sometimes I look at the analysis, I see, some traders will put down, the exact pip where the market is going to bounce back. That's like, no, they won't bounce back there. Or, okay, if they do, then you're lucky, but market never works like that, okay? And one of the biggest flaws I have seen traders is that, sometimes you're trying to get in at a particular pip. Let's say you want to go long at 128.05 and the market reaches 04, never reaches the 05, and you wanted to get that 05, and then you miss the trade. Or sometimes, you're up like 29 pips and you want to get to 30, then you can close the trade. And what happens? The market will go back down, and before you know it, you never got your 30, and now your trade is negative. So market never works precisely to the level that you want it to work. And so when you are trading the market, you really have to understand it, and then you can really learn how to trade it properly. Okay, so that's just a little side note there. So going back to the rules, in a perfect trading environment, you want to wait for the market to come back 10 to 15 pips of the pre-release. And if you can get that, that would be great. If it doesn't come back 10 to 15 pips, then 20, 25 should be acceptable depending on the release. And of course, you would put the stop loss at around 15 pips of the entry price. Sometimes I'll extend it to about 20 pips. It depends on the pair that you're trading. If you're trading the pound yen and you're paying 9 pips spread and you put down a stop loss of 15 pips, and you're just asking to be stopped out. So depending on the pair that you trade, sometimes you can feel free to extend it, but I will never use, I will never extend this beyond the pre-release level. Remember when I talked about pre-release just in the previous slide? Pre-release is the holy grail, well, not the holy grail, the line in the sand for use trading. So when we look at the market, we always pay attention to the pre-release. So no matter what your stop loss is, when we if we enter about 10 to 15 pips of the pre-release, then yeah, your stop loss has to be 15 pips. But if we enter about 20 to 25 pips of the pre-release, then your stop loss could be 25 pips. And what we do is every time we're up, if we're up about 20 pips, what we do is we will take off 25% or 50%. It depends on how you manage the trade. But the idea for this point is that once you're up 20 pips, you should take some profit off. Because remember, this is news trading. This is not long-term trading where you hold on to a trade. One of the biggest mistakes that I've seen some traders rationalize with the way that they trade, because when you jump in on a trade, you might be looking at a trade. But then when the market goes against you, you rationalize by telling yourself this is an investment and I can afford to hold on to it for a month. But that's not the case. When you start out with trading, you gotta keep your focus. This is just a daily trade. If you gotta take a loss, you take a loss. So this point basically means that when you get into a trade, when you're up 20 pips, you gotta take something off and move your stop loss to break even so that the trade could keep on going. Because retracement trade, even though it's a little bit safer than the spike trading, it's a little bit easier to get in. But sometimes market reaction, there are different forces going on in the market. Sometimes you could analyze the market perfectly, but then there's underlying trend going on. There could be some orders being filled, and before you know it, the market could come back. So you gotta always be careful when you're up a certain amount of pips, especially with this type of trading. You take some profit off, right? And last but not least, this type of trading is safer than trading the spike. Sometimes we might not get a retracement, so the pros and cons for this trade, sometimes you don't get a trade. With spike trading, if we get the number, we jump in. You don't miss the trade. But with retracement trading, it's safer, but you do miss the trade sometimes. All right, so let's go on to the last method for trading. And what I'm going to do is I'm making a series for the Mastermind Mentoring program. So next week I'm going to do another webinar, and I'll send out the invite to you guys towards the end of the week. For those of you who attended this one, I really, would recommend that you attend the next one as well. I'm going to talk about what happens after the news release. Today we're just going to talk about before the news release, when we are planning to trade the news. But there's 3 ways that we trade the news, which the first one I already talked about is the spike trading. Second one is the trade the retracement. The third one is pre-news trading, right? But then after news has been released, there's also 3 ways that you could react to the news. Now, those 3 ways, if you really understand the news and how the market reflects, you can practically trade any news. And regardless of if the number comes out hitting deviation, or if the number comes out in line with expectation, or if you get a conflict, right? You just have to understand how the market reacts to those releases to take advantage of those. And those 3 ways, 3 circumstances, that's how I put them. It's basically nobody teaches that, nobody explains that, because a lot of traders, or at least the news traders that I know, when they look at news, they tend to treat it like technical trading. When the MACD crosses with the stochastics, that's when you need to buy. So they have like very strict fixed rules about trading, which in my opinion it defeats the purpose sometimes for looking at the market from a fundamental point of view. Now, if you understand the implication of news, right, and you see how the market reacts, regardless of whether you got your deviation or not, if you understand the implication, you should be able to take advantage of that. And it's not only you, because if you see the market moves in the direction that that the news is pushing, even though we didn't get our deviation, you know that the market only moves because there are people buying or selling it. And obviously, that news was meant a lot to different people, and that's why the market moves. So there's always another way of trading the news after the release, and I will cover that next week. Anyways, let's get back on subject, and let's talk about third trading method. This is called pre-news trading. Now, I haven't been doing this a lot. The pre-news that you guys have seen has a lot to do with the sentiment trading part. If you guys read my analysis on my blog or on another website that I'm currently writing analysis for, you know that I do some pre-news recommendations. But it's different from pre-news trading, because this deals with news trading. Alright, that deals with sentiment trading, and there's a major difference here. So then, and I'm going to go ahead and explain. This is the one. This is actually a pretty good strategy. I've been doing it on my own, and not on every trade, of course. But if you understand the fundamental of it, you trade it strictly using a very strict formula, you're most likely to come out making money using this method. And of course, I don't recommend you do this on every trade. Sometimes I'll give you a scenario after I finish talking about this. Now, for pre-news trading, you enter the market 5 minutes before the news release. You actually take a position 5 minutes before the release. Now, we base our entry on market sentiment and fundamental trend of the currency pair. So you really need to understand what is the fundamental trend for the pair. Now, if the trend is up, you would be looking for a buy, and if the trend is down, you'll be looking for a sell. Now, you will only enter this trade when the technical trend is also showing in the same direction. For instance, I'll give you guys a very good example. Last week we have the Canadian dollar, right? Canadian dollar on a technical trend for the short term, let's say for the week, is going down. Dollar CAD is going down. Okay. We have the Bank of Canada rate decision coming out. It was hike rates as expected, so of course that boosted the CAD. So dollar CAD went down even further. Okay, so we understand that. Now it comes to the on Friday we have the employment change on the dollar CAD. Okay, Now, that would be a perfect time to do pre-news trading because number one, we have a technical trend that's going down. Number two, we have fundamental trend that's also going down. So what happens is that 5 minutes before the employment change on Friday for $CAD, we would jump in on this trade on a sell. Okay, and when the news comes out, if it goes against our trade, immediately we'll close it. We'll take whatever loss, 10, 15, 20 pips, or get out as soon as possible. Because of the technical trend and the fundamental trend, if the news comes out against us, most likely the market will fall back and following the trend after the initial movement is over. Okay, that's usually the case with any trade, with any news that doesn't change the fundamental outlook for the pair. Now, employment change for the CAD, it's a big news, but I don't think it has the same caliber as the non-farm payroll for the U.S. But if we get a huge number, of course, you want to get out as soon as possible. But if we get a more or less in line with the expectation, or a little bit better than expected, then our trade would work out perfectly. So the idea is to get into the market if you see that the fundamental trend and the technical trend both pointing in the same direction before the release, and you would jump in 5 minutes, hold on to the trade. If the trade works in your direction, you pick up a lot of pips. If it doesn't work in your direction, you remain patient and you wait for the market to eventually fall back, and you can get out about 10, 15 pips of loss. It usually works very well, but you have to be careful. You can't trade news that can change the trend. Okay, like for instance, you don't trade a non-farm payroll pre-news, because on a better non-farm payroll, the entire market trend changes, right? But let's say, for lesser news like the retail sales out of Australia or retail sales out of Canada, those are lesser news that you can definitely trade. Even for the IV PMI, like the Purchasing Managers Index, those lesser news that doesn't really have the impact to change the market, you can always trade. So once again, the idea is to find a consensus with your technical and fundamental trend, and then you will jump in following the trend, right? And getting 5 minutes before the release, and hopefully the market will work out. If it doesn't work out, it doesn't matter, because both technical and fundamental is on your side. And if you just give it, let's say the news affects about 2 hours, so you give it 2 hours and maybe 4 hours, market should go back and give you a possible exit 10, 20 pips from the area. Now, of course, this is as I put down here, this type of news is highly advanced. I don't recommend everyone just to take this trade without knowing what you're doing. You really need to understand the market trend and the market sentiment. So I don't recommend this on all news events, only select a few. But once you get into my Mastermind Mentoring Program, you will understand how to analyze the market. You'll see the fundamental sentiment, and you'll see the risks, the risk sentiment part of the market. And by combining that also with the technical trend, you should be able to make the right decision in taking a trade based on the pre-news trading formula. So that's pretty much it, guys. That's the three trading system, the three trading method for news trading. And I hope this will help you in your trading a little bit. And before we close, let me go ahead and share with you what is it that I do in the Mastermind Mentoring Program. I do news trading. As you can see, these are the three trades that we do all the time. We do more of the retracement trade than anything else, but there are chances that we do retracement trade, and there are times that I have called several pre-news trade just following the market. Sometimes we're already in the market, we just hold on to the news through the news, and it has worked out perfectly because I know we're following basically the pre-news trading method. So give you a quick idea before we wrap up, and I'll take some questions. In the Mastermind Mentoring, our routine, basically we plan for the week on Sunday, and I publish a weekly outlook. Let me go ahead and share with you. This is basically my weekly outlook report for the week. What I do is I look at the market, and basically I point out some of the entries I'm looking at and some of the trades I'm looking at for the week. And this is usually good for a week. You know, I attach charts, I put levels that I think is good for the market to reverse on, and I go through the usual suspects, the pairs that I think that the market is likely to give us a good consistent movement for the week. And so this is the weekly outlook, which I analyze the market during trading week. Now, of course, we plan everything on Sunday, and we look at the upcoming news and determine our schedule. And let me go ahead and do that really quick with you guys, so you know what is it that we're looking for. So basically, you can do this with any economic calendar. I know that the Forex Peace Army's got one, Forex Factory's got one, Canada Day, a Canada Day is got another one. So it depends on which one you prefer, which one you like. I think anyone will do. It's just up to you. So basically what I do is this, all right? I look at the market on Sunday, and I look at the calendar. So, we go out on Monday, we have a retail sales here from New Zealand, all right? So what I do is I look at the retail sales, I say, okay, I need to plan 6:45, which is about almost 3 hours from now for a trade. So I'll plan my schedule, I'll be ready for retail sales. And at the same time, I look at the retail sales. I go through my methods, my trading methods, and I see whether there's a sentiment trading possibility going on. And I look at what is it I'm looking at. I'm looking at the forecast, the previous number. If this is a small news, which the New Zealand dollar is a smaller news, I will just stay away from any kind of pre-news trading, and I'll get ready for that. And then I look at Tuesday. I see the UK CPI. Wow, that should be a big news. And then we have the US retail sales. So I know that I have to be ready at 4:30 and at 8:30 a.m. But the CPI number is coming out at 2.9. So I'm going to be sitting on the sideline for the pound dollar today. I'm not going to be taking any trade on the pound dollar because the CPI could affect the market. So right now I will mark my calendar. Don't trade the sterling on Tuesday, or stay away from trading the sterling because I don't want to get affected. So I mark it. And of course, now we look at the core retail sales at 8:30. So I'm marking my calendar. I'm looking at the retail sales is 0.3%. And actually, core is 0.3 and retail sales is 0.4. Now, I'm more inclined to a possible risk appetite sentiment because of this release. Why? Because of the last month's non-farm payroll came out a little bit better on the private employment numbers. And all of these numbers, when you look at retail sales, you know that GDP is going to be affected. When you look at retail sales, when you look at employment, you know that retail sales is going to be affected. So all of these I teach in my Mastermind Mentoring course, that that one news affects the other news. So now, looking at the core retail sales, I know, we could be looking at a better number. There could be a speculation for a much better number because we had a surprise revision in the employment number for July, and for August we are looking at a 67,000 as opposed to 41,000, if I'm not mistaken, for the private jobs. And the job loss were much less than expected. So, hey, you never know, the core retail sales could come out better. And the idea of trading a sentiment trade, which I'm not covering here, but by knowing that market could be expecting a much better number, this release could mean that we'll see some weaker Japanese yen. So you know what? Before we're coming on Tuesday, I already know I'll probably be looking to buy the dollar-yen pair. Okay, so that's how you would plan your trade. So on Monday, you'll probably be looking, where the dollar-yen going to go down to. So right now, dollar-yen is at 83.67. So on Tuesday morning, before the 8:30, you might want to look at the dollar-yen. Maybe it's going to be above the 84.20. So that's a good 60 pips. So that gives you an idea. Looking at these calendars could really help you to plan your trade. And of course, you do the same thing with the Wednesday. You have inflation report. Bank of England Governor King speaks. So these two are basically a no-no to stay out of the sterling, to tell you to stay out of the sterling. So I'm marking my calendar, stay away from sterling on Wednesday as well. So boom, we stay away. And now we're coming to Wednesday's RBNZ cash rate. And look at this. They're expecting for the cash rate to be at 3%. So what does that mean? It means that market is going to sell off on the New Zealand dollar. Okay. So late New York session, what I'm going to be doing is probably looking to see where we are with the New Zealand dollar pair. I might take a sell trade and pick up 30, 40 pips before the release. And that's, again, based on news. So why am I doing that? Because RBNZ is expected to keep the cash rate at 3%. They're not going to hike rates as expected. And remember, God forbid, I know we shouldn't be profiting from the disaster that's going on in New Zealand, and my heart go out to the people over there. But their economy is going to be affected. And I just read a couple of reports that their GDP is going to be revised down due to the earthquake that took place. So with RBNZ keeping rates unchanged, I think New Zealand dollar is going to drop. So that's another part of my mastermind, which I teach you to see these kind of things. And then you will probably looking for sale on Wednesday. So mark your calendar. Before the release, we'll probably looking for sale. And then Thursday, we have retail sales coming out from UK. Expected 0.3% from 1.1%. This is, we're not really seeing any kind of, we have the CPI number, we have the inflation report, and Governor King speaks the 2 days in a row before. So on the retail sales, I'm not sure how the market is going to react. So no plans once again, just trade the news and stay away from the sterling. And that's pretty much what we have on Thursday, because all these other news, we don't trade. And that's what I also teach you in the mastermind. We don't trade the LIBOR rates. We don't trade the PPI. We don't trade the tick long-term purchases, and we don't trade fill effect. That takes us to Friday. Then we look at the CPI, and we'll trade the CPI. It's 0.1 versus 0.1. There's really no sentiment. We'll trade it as any other news. So that's what I do every Sunday. And I already have my plan. I know what pairs I'm going to be looking at. I know what what direction I'm likely to go, and I'm already done every Sunday when I'm looking at the market. I know what I'm going to do this week. So everything I do, and I teach everybody to be prepared. To look at the weekly outlook, to know what pairs you're looking for. You never trade by the seat of your pants, trying to jump in on a trade as the market moves. And when you look at the price action, you get all excited trying to jump in on a trade. I would never do that. When we do, everything is planned, and we follow our plan, and we have certain levels that we want to get into. If the market doesn't go to those levels, we don't even get into them. And basically, I think it's a much better way of trading, and by understanding the market, you can really take advantage of those things. So we plan for the week. I publish a weekly outlook. We look at the market, we determine the schedule, and we concentrate. That all news comes out. Most of the news comes out during the first week of the month. So on the first week of the month, we only concentrate on news trading. We mostly concentrate on news trading. And then on the rest of the month, where we will do swing trading, technical trading, fundamental trading for the other 3 weeks. So, it's exciting. We don't only limit ourselves to news trading. And last but not least, my daily routine with the Mastermind Mentoring Program. What we stopped before is the weekly routine. My daily routine is that every day I will analyze the market during the New York Open at 9:30 a.m. That's what I do. I come into the trading room every day at 9:30 a.m. and I analyze the market. I look at different trading opportunities, and I post those opportunities, and we just look at the market and we trade. And we look at market cycle. As I say, market cycle is a huge part of my trading, and we plan our trade on market cycle, and we look at the market, and and the market cycle time during. We also have one during New York session, but for every session, the Asian session, the London session, every one of them has the market cycle time. and I recommend and I teach everyone to trade during their session. So if you can't make it during the New York session, it doesn't matter. It is available in your session as well. And we also trade every high impact news release that's scheduled for the day. So that pretty much wraps up, what I do in the Mastermind mentoring. And basically, I do this on a daily basis. I analyze the market on a daily basis, and we trade about 30 news every month. And on top of that, we also take market cycle trades, swing trades, fundamental trades, long-term, short-term, and sometimes we do some technical swing trading as well. And it is a complete system. It's not just about news trading. It's not just about what happens an hour after the news, but we basically cover the entire spectrum of trading by combining the fundamentals, the technicals, and of course the market cycle part of trading. So this is a quick plug-in. Let me just let you guys know what you'll get. You'll get a 17 DVD on the Mastermind, which basically explain everything with live video trades and everything. You will get a 1 month access to my trade room, basically. You'll get SMS notification of all the trades. So in case if you can't access the trade room, you'll get the SMS trades. Oh, there's a gap there. You'll get my weekly outlook report, which is the one that I just showed you. I do this every week. You get 1 month of that. You'll get my ebook to go along with it. You will get all my chart templates and indicators, and it's proprietary. Some of the special trading method that I do is proprietary. And you will get 17 live coaching sessions. Well, actually, it's not live. I'm sorry. It's 17 pre-recorded coaching sessions. It's not 13 now. It's actually 17 recorded coaching sessions. And then you will get a complete beginner's forex course, just in case if you needed that. Okay. Thank you very much, everybody, for coming here. Really appreciate you guys showing up. Take care now. Bye-bye.